Hey everyone, welcome back to Stock Therapy with Penny. Today I am talking about Aduro Clean Tech, ticker ADUR on the NASDAQ, and it has been a wild few days. If you've been watching, we saw some unusual activity on the options market, $20 million raise announced and quickly closed, massive trading volume, and the stock whipping around. So I want to cover what actually happened, what it means, and why I think this is one of the most important moments in Aduro's story so far. So I will try and make it quick, but let's get into it. Options, here's what caught my attention. Aduro's daily volume is around 400,000 shares. That's the 30-day average. And on December 19th, the day the raise was announced, the volume hit 1.86 million shares, more than 4 times normal. Yesterday, we saw 810,000 shares at an average price of $11.95. So something else happened before the announcement. After Aduro filed their shelf registration, which is basically preparing the paperwork for the raise, there was notable activity in the options market. So this is before any details were public, but once people knew an offering was coming. So this kind of put action is typical, but here's how it works in simple terms. When somebody buys put options, they're betting the stock goes down or they're hedging a position. When there's heavy put buying, it can create selling pressure. But the interesting thing is that it can be countered when retail investors buy call options. Market makers have to hedge by purchasing actual shares. It's called delta hedging. More call buying means more share buying. You can think of it as like financial jujitsu. You're using the mechanics of the market to redirect pressure. And I'm definitely not telling anyone what to do with their money, but I think it's important that investors have an understanding of how these dynamics work, because knowledge is power, and the people with the least power in investing are retail. So I want to talk about the raise itself and what actually matters here. So Aduro just completed a $20 million underwritten public offering. So this is their largest raise ever. The terms were, it was priced at $11.50. It's about 5 or 6% discount to where the stock was trading. Modest discount for a growth company raise. Each share came with half a warrant exercisable at $16. It's a 3-year term. D. Borrell led the deal. Roth Capital was a financial advisor on it. And here's what stood out to me. This closed very fast. We're talking days, not weeks. So that tells me that there was a demand. Institutions wanted in at these terms. The warrant structure is also notable. There's no overhang until $16. That's roughly 35 to 40% above current prices. So the people that participated in this raise are aligned with existing shareholders. They do well when the stock goes up, not by flipping shares immediately. So if you compare that to some of the toxic financing you see in small caps, convertible notes, death spiral provisions, warrants priced at or below the market, this isn't that. This is clean. The math is fully funded. So let's get to the math. Aduro had approximately 7 million on hand at the end of May. They did a smaller raise in June for about 9 million, and now add this 20 million. The company has roughly $32 million US in the bank. CEO Ofer Vikis stated at the Gabelli Funds event that the demonstration plant is estimated to cost between $10 and $20 million, fully funded through the demonstration scale, with a buffer for operations, R&D, and contingencies. So this isn't a company raising money to keep the lights on. It's a company raising money to build. The next big thing is validation. For those unfamiliar with the GameChanger program, it is Shell's program for evaluating breakthrough technologies. They've been running it for over 18 years, and their explicit philosophy is, if a technology is going to fail, kill it quickly. There's a quote from Michael Rougier, former head of the program, that says the criteria for this, I should say it correctly since it's a quote, the criteria is just 4 things: novelty, and it has to be novel. That's not 10, 20, 50% improvement from what's currently available, but it's got to be 10, 20, 30 times as good as anything out there. And if it's going to die, we kill it quickly. So that's what the former head had to say. 10 to 30 times better, not percent, times. So now Aduro graduated from this program. That's not Aduro saying their technology works. That's Shell saying it after actively stress testing them. But that's not the only validation. In my recent interview with Eric Appelman, Aduro's chief revenue officer, he mentioned that they've received confirmation from what he called very reputable partners, companies that have tested Aduro's output and confirmed it works. He couldn't name names, but was clearly excited. So there's also been validation from a major naphtha cracker technology licensor. These are the companies that design and license massive steam cracker facilities that are the gateway to the chemical industry. And when they see your product suitable for their equipment, that's a significant stamp of approval. So think of it like this. If you invent a new drug, these validations are getting through phase 2 trials. You're not approved yet, but serious people with serious reputations are saying this works. So for anyone that is new to the story, let me quickly explain why Aduro's technology has attracted this attention. Their hydrochemilytic technology, their HCT, does something that competitors struggle with. First, feedstock tolerance. Most chemical recycling processes need clean, sorted plastic. Aduro can handle contaminated mixed waste, the stuff that currently goes to landfills or incinerators. Eric uses the example of a cheese wrap with polyamide barrier layer. Most processes choke on that. Aduro's doesn't. Second is output quality. The product can go directly to a steam cracker without expensive hydro treatment. Competitors often need $400 to $500 per ton of post-processing. That's a massive cost advantage when fossil feedstocks cost around $700 per ton. Third, and this is a big one, yield. Look at this chart. Aduro achieves approximately 95% fungible products. This was put out by them maybe a year ago. So fungible products are materials that can actually be used. Now we have a couple of different numbers to work with. Shell said over 80%, Erica said 85%. It clearly depends on what's being processed, but the important thing is that pyrolysis is said to yield around 65% crackable products. So we're anywhere from, 15 to 30% in advantage of what pyrolysis can do. And under Europe's new regulations, you only get credit for the carbons that actually become new plastics, not the stuff that gets burned as fuel. So Aduro's yield advantage translates directly into economics and regulatory compliance. What's next for Aduro? We know that the next generation process pilot plant data, the NGP data, should be just around the corner. Eric described it as the eagle has landed. So data from customer trials and scale-up optimizations should be coming. On the demonstration plant front, Aduro announced in October that they began global site selection across Canada, Europe, and Mexico, and they expect to finalize a short list by the end of this calendar year, really coming up quickly, with a final decision shortly after. Eric also mentioned the letter of intent for the site in the Netherlands, existing infrastructure, electrical already in place, and only about 2 million euros for the site itself. So that's the kind of capital efficiency that stretches $32 million a long way. On the regulatory front, it's moving in Aduro's favor. The PPWR in Europe now recognizes chemical recycling, and it will mandate chemical recycling, or it will mandate minimum recycled content. This creates the market, not to mention the recent change in Mexico that goes hand in hand with their collaboration with ECOSA. So I want to take a minute to look at the chart, and the stock flushed to 1070 on the raise announcement, right to a key Fibonacci support. Since it's recovered above 1150, it was 1195 last time I looked, erasing most all of those losses. It looks like we're in a standard ABC correction with the 50-day moving average right around 1330 as the next resistance to flip to support. So if that happens, the technical targets point towards previous highs around 17 and potentially 22. So I'm not a technical analyst, but that's how I see it. Also, Aduro just raised $20 million at reasonable terms from institutions that wanted to participate. So pay attention to the speed of this close. It was barely below market and it closed right away. So you know the groups that bought and they think Aduro has big potential. They're fully funded through their demonstration plant. They've graduated from Shell's GameChanger program designed to kill weak technologies. They're getting validation from partners and steam cracker licensors, and the regulatory tailwinds are building. And the technology delivers yields the competitors can't match. So this is one of those moments where the story shifts, when a company goes from interesting idea to this is actually happening. As you probably know, I've been a shareholder since IPO. I remember watching this when it was benchtop scale. Watching it reach this point is pretty special. But as always, do your own research and keep researching. I'm not a financial advisor, but I wanted to share why I am excited about where we are now. So thank you for watching. hit subscribe if you want more stock therapy, and I will see you at the next one.